Okay, I got the thumbs up from the back. We're good. I wish there was a little bit more light like directly over us. You know what I mean? All right, we're going to go ahead and get started with this afternoon. I know you're excited, right? We've had a great morning full of information. So it's, the end of the year, we do kind of focus a lot on the AFR because we know that's what's coming up for you guys at the beginning of the year. So every year we kind of go through and look to see where, the main questions that we get while you're filling out the AFR, right? So, as you're doing that, questions come in about what needs to go here, what needs to go there, problems that we're seeing once we get the AFR and those audits kind of start happening. And we just kind of decide we're going to at least educate and talk about the top items, right? How many were in newly elected for auditors this year? Raise your hand real big and high. I went through that entire AFR process very quickly, and it was very, very long. So for me to go in-depthly, that would be 3 days of it. And so we save you from all of that, and we just pick out the top things from the prior year. So hopefully it'll help you guys as you move forward to even start gathering information on filling out the AFR for next year, okay? Oh, there he is. One here yesterday, one here today, but he's here in spirit. So there's Paul. All right. So for the annual financial report, you are statutorily required to fill this out by 5/11/14. So no matter how you report, we talked about that yesterday, right? You're either a GAAP report or you're a regulatory report. Either way, you are required to fill out an AFR, okay? And that AFR is due 60 days after the end of the year. So for next year, it's going to be March 1st. What? Okay, guys. All right, so if it is a Sunday, it probably, I tried. Okay. Anyway, if it is a Sunday, then it'll be March 2nd. Okay, it'll fall on that Monday after. All right, so as we kind of go through this, the main things, there were really 3 things that we wanted to discuss. One was I want to talk again about setting up a standard fund versus a custom fund, okay? We want to talk about investments and what those look like in the AFR, and we are going to do kind of a deep dive into capital assets, okay? And then I've got a couple miscellaneous reminders. So let's start with setting up a standard fund versus a custom fund. All right. So, chart of accounts. State Board of Accounts prescribes the chart of accounts that you're to use, right? You heard Elise over here talking about how we're trying to get standard funds, right? Well, we have our set. DLGF has a set too, which is why we want to standardize those. All right, so for State Board of Accounts set, we have them set for counties in this manner. So your 1,000 and 2,000 funds are statutory funds. When I say statutory, that means there is something in statute that says you must have this fund. Okay? So that's a statutory fund. 4,000s are local authority funds. So if you are a town that, let's say you're going to do buggy fees, right? You've got Amish, you're going to do those buggy fees. You could set up a home ruled fund for those buggy fees, okay? So if you were going to do that, you would create that under a home rule to take the fee and to create the fund. Once you did that, that fund would fall in that 4,000 section, okay? Your 5,000 section is your accounting funds. This is more like your payroll, withholdings, things like that, your ins and your outs. Your 6,000 funds are going to be your settlement funds, right? It's where we put everything that we're getting ready to send out, right? Again, it's kind of an in and an out. Your 7,000s are what you turn over to the state, okay? Your 8,000s, my personal favorite, are your federal grants, okay? And your 9,000s are your state and local grant funds. When this was all created, it was so that you could identify what kind of funds you have, right? It's nice to know that if you have a 1,000 fund or a 2,000 fund, that's a statutory fund. There should be statute that helps you with that fund, right? So if you call me and say, hey, I don't know, what can I use MVH for? right? We can go to a statute because that's 1176, right? So it starts with a 1, it's in the thousands, we can go to a statute. So anytime you call me and say, hey, can I use this fund for that? If it's a statutory, we immediately go to statute. So it's kind of nice to know, and when you kind of see them, federal grants, for example, when you're doing your CFA and you're entering all that grant information, the 8,000s are the place to start, right? It's not we know that some federal funds are not there, right? 4D is a prime example of that, but most of your funds should be there, okay, that you're going to be reporting on. All right, so while on your end, you're going to, or if you're looking for the chart of accounts, sorry, I need to back up. We do have it on the auditor's webpage of our website. Okay, I kind of did a screenshot here, so if you get to the auditor's page and you go down to chart of accounts, you're going to see 3 different documents. All right, the first document is the instructions. This goes into detail on what funds are, what type of funds you have. Is it your general fund? Is it a special revenue fund? What does that mean? We go into accounts, right? And what different kinds of accounts from the dispersing side that looks like. We even look at revenue accounts, right? And where you're going to put things. It's a pretty good document to start with if you are especially new to fund accounting and don't quite know where to receipt something or disperse something from, okay? The other 2 are just different versions of the same thing. The one that has, I can't read my... Okay, the account tables one was first. So the account tables is going to be kind of in a landscape form. Those funds are in, I think, alphabetical order, not numerical order. They detail out whether or not it's a special revenue fund, if it's statutory, things like that. We give you a little bit more information about each fund. My favorite and like most used document, right, is the last one, which is the descriptions. This is all in fund number order. All right, so when you're looking, you call and ask me about that statutory fund, this is the document. I have 3 of them printed. One sits at home, one is in my binder down there, and one is on my office at work. Because that tells me what fund it is. So if you were looking at MVH, it's going to have 1176. It's going to tell me that's your MVH unrestricted, and right next to it, the statute. Right, so if you have any questions, that is the thing I say, print out. We update it every year for any changes. Keep it right next to you, so when somebody asks you a question, you can call me, but I'm going to do just that, right? I don't memorize them. I wish I could be as good as Lori. Man, I could say, hey, Lori, I can still do it to this day. Hey, I can get you close, but she can get me, pinpoint me right there. I'm not quite that good. So this is my cheat sheet, okay? All right, so I kind of just put a screenshot up here so you could kind of see what, I think this one's the accounts. Yeah, this one's the accounts. Sorry, my contacts are super dry and so everything's kind of blurry. But anyway, so I just put a screenshot of that. So when you're entering it into the annual financial report, the standard and custom funds are important. We kind of touched on this, I think, in the fall last year with MVH, if anybody remembers that, and why this is so important. So, if it's a standard fund, that means it already is on our chart of accounts, right? Typically, it's a statutory fund for the most part. So, if you have a fund that is already on our chart of accounts, there should be a standard fund in Gateway for that. It is important that you use that standard fund and not customize your own fund, right? What happens when one county standardizes and one customizes? When you run a report for all 92 counties, it's real hard to pin down information because you made a custom fund, but you made a standard fund, right? It's hard for us to pull apart that information and be able to give it to legislatures. MVH is the most important one that we talked about last time. That data is just so off the charts because everybody was doing it so differently, right? And we're trying to bring that down. So when you go in, and I know most of you upload stuff, right? Is there anybody I forget who hand enters it in. Was there somebody that hand entered it all in? Oh, I feel sorry for you too. I'm sorry. So when you'll especially appreciate at least part of this. But when you're doing it, even if you're uploading it, you should go back and check. Okay, Stacy, if I am wrong, if it is a 1, it's a standard If it's a 9, it's a custom, right? Okay. So if you're uploading and you pull and you look at your reports, if you have entered it as a standard fund, it should start with a number 1. Okay? If it's a 9, that means it's a custom fund, right? So you need to kind of review that to make sure that if it is a statutory fund, one that's on our chart of accounts, it really needs to be a standard fund. All right. So to create a standard fund, you're going to go into Gateway, and I'm not going to walk you through the whole process here, but you're going to go in, and when you log in, you see your AFR menu, right? And you'll see at the very top of that, it'll have your fund, your financial fund by data. Okay, you'll click on that, you'll open it. This is where in that itty bitty tiny window that you have to scroll way down for, everybody know what I'm talking about? All right, that is where at the top of that, right before you get there, is a button that says Add Fund. So if you need to add a fund, that's where you're going to go, okay? Once you click that, it's going to bring you to what's up on my screen or what's in your slide. All right, so once you're there, you have 2 options. You can build a custom fund or you can add a standard fund. To add a standard, we're going to start there. You will enter what you call that fund, right? Because you may not call it exactly what the title we have used before. That's okay, as long as we know that that's the same thing. But enter yours, what fund number you actually use. You do have to check if it's federal, right? That just is part of the process. But then you can click down into it and pick the standard fund that goes with it. So while you might call it, maybe you just call your MVH unrestricted MVH, right? I can't remember, I think it's unrestricted inside the standard fund. You would just scroll down and pick that. Okay, once you have it, you'll hit down at the bottom to add the fund, and it should add it. If you can't find it, right, so let's say you're trying to add a fund and you can't find that fund in that list, chances are you already have that fund. Okay, so go back, take a look at the funds you already have and see, because once you add it, it disappears. It won't let you add a second. Okay, does that make sense? But there are times when you have to enter a custom fund, okay? That happens, again, on home ruled funds, right? If you got any new grant funds, things like that, you're going to have to go in and add those most of the time. In that case, you're going to go to the right side of the menu when you say, I want to add a fund, and you're going to click Build a Custom Fund. Okay, and then you're going to enter the information accordingly, which is basically the same as you did over here, you just don't have a drop-down menu. What do you call the fund? What's your fund number? Okay, and then is it a federal one? Once you do that, you click it, it will add your fund to the program, okay? So why is this all completely important? We talked about it, right? It provides consistency across all 92 counties. You guys have to understand that when the session starts, do you know how many phone calls we get from other agencies, governor's office, the state health department, who are trying to run the numbers for legislation purposes, right? If your ledge team is trying to get something passed, when the MVH passed, for example, right, that 50% was hard. Nobody liked that. But in order for them to make any kind of informative decision, they have to have good information behind that. That's what makes this so important, right? Not only does this happen during that time, but there are people, citizens, that will actually run reports off Gateway and say, they don't have this, they don't have that. This county does it this way. Why is this county doing it this way? And we have to sit and kind of explain to them and dig to find, especially when those fund numbers are varying, okay? Okay. Do you have any questions on fund numbers before I move to investments? I see her.
I understood you said the consistency is important. And I can't talk this talk very well, but there's times I'll say, well, that's the state number. This is the number we use because it's the financial program. Mm-hmm. Is there some way we can edit the name and throw that number in there so when I'm running reports, I'll say, oh, yeah, that's really a ba-da-ba.
There won't be a way to do it within Gateway. I don't know about your software.
So then the other side, maybe I'll do that.
It might be able to, I mean, a lot of times, or at least at one point, I don't know now, there was a crosswalk. Yeah, there was a crosswalk. That would have to be a software vendor question, though. Anybody else? Okay. Oh, wait, I see a point over here. Thank you. Just point. Don't run. Just
I
walk.
get my steps in. All right, so when you were talking, I was a little bit confused because you just gave us this list that says if it's a 1,000 to 2,000, it's statutory fund, and that 9,000s are state, local grant funds. But when you were talking about that submission, you said a 1 and a 9.
Yes. So in Gateway, these fund numbers are important, but there is a longer number when you enter something in Gateway. So it'll have your actual fund number, but there's some extra numbers on the beginning of it. And that's just decoded into Gateway. So when I say a 1 or a 9, it's not these numbers. It's just the beginning of what you enter into Gateway.
Oh, okay. Thank you.
No, very good question, actually.
So if you want to see what it looks like when you download your TXT file, that's where you're going to see the 1s and 9s.
Yeah.
Because
And
it's
we can
really
help you with that when you get to that point. Just give us a call. Okay. Let's talk about investments, right? All right, so while you guys are not the investing officer, right, you don't do a whole lot with investments, you are required to report the investments. You do have to get most of that information from your treasurer. You've got to work with them to make sure that they are done correctly. So I just want to talk about a couple differences because there are two different kinds of investments we're going to talk about. One is total monies on deposit, right? We hear that all the time, total monies, total monies. All right, so in general, a total monies on deposit investment is when the treasurer says, I'm going to take X amount of dollars from the bank and invest it. It is not tied to any fund. So since it's not tied to any fund, there are no ins and outs on the auditor's ledger. Does that make sense? Because you can't tie it to a fund, right? I'm just taking this money that's in their main bank account. I've got 50 grand over here. I'm going to do a CD for it. Okay? So when it's done, or while they're investing it, it's still in your fund ledger. You never dispersed it out as an investment. So it's still accounted for over here. Okay? Treasurer's going to keep it and say, this is the investment I have, right? They need to understand and make sure total monies or total, whatever they're going to call it, so that they understand it came from the bank, didn't come from a fund. So there's no separate fund created. You shouldn't have a total monies fund on your books, because if you do, you will overstate your cash. Does that make sense? Okay. Now, any interest that's earned on that total monies will be receipted in, okay? And we'll follow whatever your Board of Finance says, okay? So statutorily, all interest goes to general fund. There's a few exceptions, drainage, for example, is one. But goes to general fund unless the Board of Finance says differently, okay? But they decide, okay, where that interest goes. So you should be getting the interest part, and you're going to be recording that. But as far as the investment itself, if it's coming just from bank and not from a fund, okay, you're never taking it out, so you're not gonna, there's no recording you're gonna be done of it, only the interest. Okay, do we have any questions on that? Yeah, I mean, you're really not gonna do anything. You're not gonna record anything for it. Yeah, just the interest. You'll get a quietus for the interest, and you'll record that like you do any other interest that comes in.
Do you care then where it came from, or it's just interest earned?
It's just interest earned.
Okay.
Okay. Oh, sorry. Let me go back.
This might be a dumb question, but where do you write the check from to go buy your investment?
You're not going to write a check from it. They're going to do like an ACH thing from their bank.
Oh, like a wire transfer or a,
On the treasurer's side, yeah, they'll do all of that.
okay.
Okay? I got one in the very, very back, too.
Oh, God. I got her
One
first.
over here,
on
too.
you.
Okay. I got two.
Ooh, Ricky, roller skates.
I think I would
Sounds
break
like
an
a
ankle
liability
and it
problem.
wouldn't be funny.
Do we, on the auditor side, have to do anything to record a premium or discount on the purchase?
So most of that's going to be held at the treasurer's side until it's cashed out. Okay? And when that happens, then we'll have to talk about the differences between the two. But right now, I wasn't going to quite go down that rabbit hole because that's a little bit more than I have time for. But if you want to talk about it, call me. No, you don't want to talk about it.
I don't want to talk about it, but I thought maybe some other people might want to know about it.
I got hurt and I got up here.
I don't have a question. I just don't know if this might help others as someone who's worked, what I like to say, both sides of the hall, because I was the chief deputy treasurer and I am currently the auditor. When the treasurer moves money for investments, it doesn't affect your fund balances, which is why there is no comparable action in your office when he is moving those monies around for your investments. So if that helps at all. Obviously, when money comes in due to interest, you're going to receive those into your interest fund. But outside of that, anytime money is moved into an investment account, it's from a bank to a bank, and it's not money
Not anytime,
primarily.
because we're going to talk about one where it's not. So
Primarily.
not anytime. If it's a total monies and only from bank account.
Yes. So you're not going to have a matching transaction within your funds for those account movements.
Right. And then all the way up here.
Yes.
You are timed 10, 9, no, I'm just kidding.
If I had roller skates, I talked to
feel
Paul
like
about
that's
it.
a bad
I feel like,
idea all
I mean,
around.
not the ones with the 4 wheels, but the.
Maybe like a
inline.
scooter with handles?
Like rollerblades. I mean, rollerblades.
Okay, so I don't know if I'm telling on ourselves or not, but our treasurer does ask us for a check to be issued, and we.
Who doesn't? I'm sorry.
Our treasurer.
Okay.
And so we do handwrite a check, and they also sign the check, but we put FBO for the county, and they take that check to the local bank to create the CD.
But it's not posted on your ledger.
It's not posted on our ledger. I just wanted to make sure, because you talked about them ACH.
A lot of them
Is
do
that
the
okay?
ACH, but yeah, if you've got some sort of check that can do that and not be posted and you can still track it, that's okay too.
Okay, great, thanks.
Yeah. This way. Right here, front row.
So last year, they cashed in a CD from one bank, receipted it in, turned around and issued a check out to another bank. And this has caused a lot of problems with people looking at our financials saying, well, here's the $2 million you lost. We didn't lose $2 million.
Right.
You know, we have a budget deficit because our budgets have been higher than what we needed to spend.
Right.
But we didn't lose $2 million.
Right.
So was this incorrect that we should not have issued? This was under the former auditor. It wasn't
Right.
under me. But should we not have issued that check?
It depends if it, I mean, without knowing specifically what that investment was, are you 100% sure it was a total monies investment?
It was a CD. So we receipted in the
But even
interest.
if it's a CD, total monies can be CDs and so can fund investments. Okay, so these are, I haven't got to fund investments yet. So you have to clarify what we're talking about. If it's a total monies, what she does is they cut a check, but they don't post it because it doesn't affect her funds balance. Okay, so it's just to move money from one bank to a CD. In that case, there should be nothing on your financials.
Okay, but it is technically on our financials.
So that's why I'm saying, like, if it was a fund investment, which we're going to talk about here, there is posting requirements.
I don't think it's a fund investment because these are simply CDs that have just rolled over from year after year after year.
We don't like rollovers a whole lot either, but that's a whole other.
Yeah.
We can talk about that.
Yeah, let's take a look at your individual case. I mean, I can tell you yes and I can tell you no, but if I don't know for sure what we're looking at, I don't want to steer you the wrong way. Okay? So let me talk about fund investments real quick, and then we can see if there's any additional questions. Okay? All right, so fund-specific investments are like I'm just going to use one that I know has to be coming out. How many of your recorders have walked down to you and said, I have an excess in my perpetuation fund and I want to invest it? I said, there should be several of them because I'm getting lots and lots of emails about it. And so they can. I mean, that if they have an excess in that fund, they can go to the treasurer and say, hey, I have this excess money. I want to earn a little interest on it. Okay? So, as long as it's in line with what the Board of Finance wants to do, and treasurer's okay with it, they can take money from that fund and put it into a CD. Okay? In that case, it affects the fund, right? So you're going to post out a disbursement from that fund, purchase of investments. So it's going to come out of that fund, okay? This is important because as that goes out of your fund, it's going to be held over here into an investment, but now your recorder can't see that money anymore when they pull their fund transactions, right? That money's not in that balance. That's a good thing. If you had left it in there, it could cause all kinds of problems and they could maybe even overspend, right? When they don't have it. So you will post over here to purchase of investments. And then once that investment matures, okay, and you're going to bring it back in, you will then receipt it into that perpetuation fund under sale of investments, okay? So then you're going to increase your cash amount because the investment is no longer out. Does that make sense? And then you're showing the ins and the outs of the investment. Make sense? All right. So, oh, no.
I'm running. Did you time me? How fast am
I'm
I?
just kidding.
So my recorder didn't approach me with this, but my chief probation officer approached me with this question concerning their user fees fund. Yes, no,
Okay. So we're talking about like what funds can they invest?
yes.
So again, I'm going to go back that the treasurer is the investing officer. Okay. Now, any fund can be invested. Here's the problem that they have to consider. These are their operating funds for most of them. They cannot invest the money that they need to pay payroll per se, or whatever other normal expenses they're going to have. If they're wanting to invest those dollars, they need to be able to show there's an excess, right? Because we worry about liquidity, right? You get into a jam, you need to be able to pull that investment. You don't want to wrap it up into something to where now you're going to pay a penalty for it to get it out. And they need to understand the consequences of that. So if for whatever reason probation, is that what you said, probation? Which to me, I'm thinking, how do you have a huge abundance? But neither here nor there. You know, in probation, you've got all of these fees. Like, they need to be able to show you, here's my budget, here's what I'm going to need, and here's how much I have excess that I want to do. They need to have a plan. So that would be my advice to them.
But if they have a plan and they can show that, they can invest. Okay.
As long as your treasurer and board of finance are okay with it.
Well, yes, but,
Yes.
okay.
Yeah. There's nothing that says you can't invest. The only thing that comes down to it is there are certain regulations around property tax collections that you're holding until settlement. There are certain rules in play for that. Any other questions on? All right, so your treasurer is going to, should give you any kind of fund investments and stuff on the supplemental AFR. You should be able to know what investments they're holding and what funds those go to if they have them. All right, so this is where you're going to gather most of that information in order to enter it. Make sure it matches with what you have too, right? Because you're already showing like an in and out, and you want to see what that balance is of their investment. So if you had a perpetuation fund one, for example, they're going to show the the beginning balance and what's happened there, and you need to go back and make sure that it matches yours, and then you'll add in any kind of investments on your side just to get the balance where it needs to be, especially if there's interest involved that hasn't come back to the county yet. Once you enter the gateway information, and this is just a couple screenshots. I don't know how hard that is for you to see. It's very difficult for me to see it here. Right here, when you have the financial data by fund, the investments are the first two columns. Just the beginning and ending balance are shown there. Again, it's only going to be when it's a fund investment. When you're entering the receipts and disbursements, so on the receipts side, it's under other receipts, right? So when you do sale of investments, you have to scroll all the way down, make sure that it's posted under sale of investments, but it's found in the other section. Same thing with disbursements, okay? It's under other disbursements, and you'll scroll down to the purchase of investments, okay? It's just kind of nice to know where they're located once you get in those screens, right? All right, the only other thing I want to mention about investments is Trust Indiana, right? Because almost everybody's in Trust Indiana, it seems like, right? And we're doing that. We are going to treat, and Trust Indiana should be treated like a savings account, okay? Your money is always available to you at any point in time, right? So as you are making investments and you're putting money in there, if something happens and you need to pull it out, it's available immediately. Okay, so we've talked to Cindy Barger and all of them, and so it's not going to be this like separate investment that's out here. It's just treated kind of like a bank account, okay? But this really requires you and your treasurer to kind of work together, okay, to report everything and make sure it all gets reported properly. All right, any other quick questions before we jump into what your favorite topic's going to be? I got one right here. She's coming.
Big voice.
Nobody wants the microphone, but I can't hear you if you don't.
I have a loud voice. The supplemental AFR,
yeah.
AFR. Do you guys have a copy of that you
So that's on our website.
on your website? Okay.
Yeah, it's underneath the county section. So when you kind of go in, I know it gets kind of confusing. When you go to our website, you're going to pick entities we examine. And that's a new language change from within the last year. And then pick counties, okay? And instead of going to your page, just scroll down, okay? And it's Gateway, right? Or does it say AFR? I can't remember.
I think it's under the AFR.
Might say AFR. So if you go underneath that section, you expand it, you'll see the supplemental AFR down there. It's just an Excel sheet, okay?
Thank you.
Hey, no problem. All right.
Hold on. There's one over here. Two over here. So we're responsible for this AFR, the supplemental AFR. Who are we getting those from? Is
Okay.
it just the treasurer?
Okay, so the supplement, okay, so you're filling out the AFR because you're the fiscal officer for the county. You're responsible for all those funds that you're posting to. But there are departments that are responsible for their own funds that do not funnel through yours, okay? So for an example, your clerk, right? Your clerk has trust funds that they hold, and they have ISETs or child support, okay? So at the end of the year, or in January, they're going to fill out one of these supplementals that has all of their information, right? Their beginning, their receipts, their disbursements, their ending, for you to include onto your AFR, because otherwise it's not included in that information, okay? Other departments would be sheriff's going to have inmate trust and commissary, okay? You could have a tourism commission that's holding money, okay? I feel like I'm missing one. You could have, do I mention this or do I not mention this? Tourism? I did tourism. Okay. If you have any other commissaries in your county, they would need to be included as well. Okay, so basically anything that runs through another office that's not included in yours, they're going to send you a supplemental AFR. Okay. Now, they're responsible for that information. Right? You can't be responsible for what they report to you.
Right.
But when you get them, you're going to take a look at them and look at your their beginning balance to your ending last year balance to see if they work. You can ask a few questions, but they have all of their records. Okay?
And so, like, we can can we see what was reported in the AFR last year to kind of see who that would be again?
You have
this
total
year?
access to it now.
Okay. Thank
Okay?
you.
Yeah. Was there one more? Yeah.
Okay, on the investments, if our treasurer puts out bids to do a CD and she takes the money to the bank, I understand that we post that as a purchase of investment, and then when it matures, it's coming back as a sale. What if she renews it at the same bank that currently holds the expiring CD? A lot of times they roll it over.
They roll it over, and so it depends on how much you're rolling over, right? If it's the exact same amount, okay, of just that, you're going to be okay to not post something else. But if it's got
Okay.
interest,
Then
or
we
they
post
haven't
the
been turning it in, then you need to do the whole thing.
Yeah, they do that. I just didn't know if we needed a transaction on our ledger for the renewal.
No,
Okay.
not necessarily.
Thanks.
Okay. Wow, that was a lot. I like that. All right. Have you guys noticed that we've had a theme about capital assets the last 2 days, right? We get lots of questions about capital assets. All right. So I kind of just want to briefly talk about what they are, and then we're going to talk about like how we calculate a few things for them, okay? In 19 minutes. So buckle up. All right. So GASB Statement 34, right? You guys are all like, what is GASB, right? That is the Government Accounting Standards Board. That is what we use when we're doing audits. Those are the standards that have to be done for reporting, okay, that come out. And so they are the ones who define what a capital asset is. I'm not going to read it to you because we're going to go through what it is, okay? We also have stuff in Uniform Compliance Guidelines for capital assets within Chapter 1, okay? This is where it is your responsibility to report it, okay? Inside that, Stacy kind of went over, but you are required to have a capital asset policy. This policy is super important because it has to have the main thing you need for a capital asset. Question. Do you want to report every single thing that you purchase in the county, down to the number of pencils, Post-its, paper clips that are in your office? Okay. If you don't set a threshold, they're all capital assets, aren't they? Okay. So your county should have a threshold already established. And I believe you all do because we pushed this about 5 years ago real hard. Okay. At that time, I think people were using about $5,000, but it can vary. There is no set amount that is determined at your county, what you think is a reasonable amount, just as long as you're materially catching any big dollar items. County has a lot of stuff tied into assets, right? That is stuff that you own that has a financial value. Vehicles, land, buildings, things like that. Okay, inside the capital asset policy, I'm going to come back over here. We've talked about the threshold. The other thing that should be included is your useful life of an asset. Okay, that's important. The only one that's not, you don't need to know useful life is land, right? Land doesn't typically go bad, right? It doesn't depreciate over time. Land is land. But a vehicle, right? How long, if you buy a vehicle, how long does that vehicle going to last you? That could be different from county to county. It could be different from department to department, right? If you, let's say you bought a vehicle for your surveyor who only uses it a few times a year to go out and inspect the corners, okay? That might have a different useful life than your sheriff who uses a police car every single day. All right. So again, that's a decision that you guys need to make locally, and you need to have some sort of schedule of how long you think an asset is going to live for. This is important because it helps you plan ahead, right? If you know I'm going to buy these police vehicles and they're only going to last me 5 years, right? Then you know in 5 years, you're going to be looking to put out some money for some more vehicles. Okay. So you'll have that. You should, again, you're going to have a list of capital assets. You should be holding the main list. But your departments should know where everything is, including the little immaterial items. Maybe not paper clips, right? But I like to use your sheriff's departments because, they have their firearms, right? Things like that. Your IT department, because laptops, we should know where all of that stuff is at all times. So they should have a list of how many are in the county, especially laptops, because they can have some sensitive information and access to things. We want to make sure we know where all of those are. So it should have a detailed listing of what it is, and you really should know where it is, right? So a lot of times you'll see tags. I don't know if you can see my computer, but I've got a tag so that IoT knows exactly who has the computer, right, at what time, or for how long I've had it. And then every year I have to give them the serial number on that they match. Like, Make sure it agrees to the records that they have, okay? So that's the control that they have. You have to do so that's the control that they have. You have to do at least a 2-year inventory, right, of what you have. That is required. That's uniform compliance guidelines. It can be stricter, but we do audit for it. This is just to make sure we're catching anything that's added or deleted. I'm not going to spend a real long time on these slides, but I'm going to put land in here. So land's going to be a capital asset. If you own a lot someplace, you're going to include that on your capital asset list, okay? So any land that's owned by the county. Any kind of infrastructure, a lot of times you're talking, these are like storm and water, drainage, highways and roads, sewer systems, things like that, things that are not like movable, okay? A lot of times your highway department, well, not a lot of times, your highway department is tracking your roads, right? They have to report on all that stuff just for like their MVH and things through LTAP. So you can work with them to get the information you need for reporting, okay, of infrastructure. We also have buildings, so any permanent building structures you have. So if you have your courthouse, but then you have an annex building, right? Or you could have more than one annex building. You could have a couple annex buildings. So those would be all classified as buildings. These often have a useful life of like 50 years or more, right? But again, it's a county decision. There are things like improvements other than buildings. These are generally things like sidewalks, fences, retaining walls, things like that. Things that aren't really a building, but yet they are put into place. I did try to put some ideas of useful lives on here just to kind of give people a starting point, but again, your decision. We have equipment. Equipment's going to be, everything, your machinery, your trucks. You can do computer servers or big, huge safes, things like that. And then there's another one that's called books and other. It's really rare for a county to have any like books or other, but like maybe you have like an art collection of somehow that it might fall underneath there. But those are very specific, and if you have questions, you can let us know. And the last thing, category that you would have would be construction work in progress. This is when, let's say you were building a building, right? You kind of categorize everything into this construction work in progress until it's complete. Once it's complete, it comes out of this category and then becomes a whole building. All right. Okay. I know I went by those really quickly, but I really want to talk about the value of them. All right, so we value the capital asset at the historical cost. What did it cost you to purchase that item? Okay, so if you bought a truck and you have the invoice for what you paid for the truck, that's your historical cost. Okay, that is what you're going to use. It will never change. It doesn't fluctuate it's not what the value is now, it's what the value is when you bought it, right? Because you've used some of it, right? So it may not be worth what your insurance says it's worth right now, right? What was it worth 10 years ago when you bought it? Historical cost, that's the asset's value. That's what you have in it. What happens when you don't know what the historical cost is, right? That comes in play a lot of times if you've had a building that you've had forever, and maybe you forgot that the county owned it, now we got to add it to the list, and how do I determine what that value is going to be? Okay, how many of you read our bulletins? I don't know if I should be offended, Stacy. Like, oh, me too, girl. All right. Every December, Stacy and I create the little estimated historical cost index and put inside there. Okay, so every year, because it will change from year to year. So when you're trying to figure out what you don't know it, right? You can't find the posting of it when you purchased it. You can't find an invoice for it. You have no clue where to start. Okay, then you need to try and figure out how do we figure out what we think we paid for it. Like we need to get close to what that historical cost is, okay? At that case, you need to figure out what is that asset valued now. A lot of times this would come from like an insurance thing, right? So if you've got insurance out on it, see what they value it at. That's going to be your starting number. And then you've got to find a multiplier to get it back to that date. This table in the December will help you do that. Okay, and it's based on how many years you've owned the asset. So if you had bought a vehicle 10 years ago, it never got put on here, you have no idea. Okay, I bought that 10 years ago. Right now it's, it's only, I don't know. Right now if I bought it new, it would be, $50,000. I'm going to go find what the multiplier is for 10 years. I'm going to multiply it, and it was probably 15. I don't know. Car prices are ridiculous. And then that's going to be your historical cost. Okay, if you have to do it. But in that December bulletin, we walk you through this. Okay, so it's a detail. We show you how to use it, and it is in every single December bulletin that we put out. Okay, here's what it kind of looks like, or what the table kind of looks like. And then again, you can't hardly probably read it, but in the square is the instructions on how you do the multiplication for it.
I have a quick question on, I had the highway department ask me, they bought a new truck and they had a trade-in. Should they be putting the final cost, like after trade-in on there, or the before trade-in price on there?
So if they are putting in a trade-in, you are still giving that away. So you would do the final, not just that, yeah. Do we have another?
One, but anyone, question?
Okay.
No.
Okay.
Oh, yes.
Oops.
It might be jumping the gun on this, but do these depreciate?
Oh,
Do we record depreciation?
We're going to get there. Okay. Very quickly, because I would love to spend more time, but. All right. So that's what we're going to go into next is you do have to do depreciation when you're doing your AFR. So there are calculations that are going to have to be done. This is why useful life is important. If you don't know the useful life, then you don't know how to depreciate it, right? So when you buy a truck, right, it does depreciate in value, right? As soon as you drive it off the lot, at least that's what my husband tells me when he groans when we buy a new vehicle, but it depreciates. So in the capitalization policy is where that useful life determination should be. But you guys have to determine what that is. Again, it's your experience with it. How your county does it might be a little bit different from this one. Your usage might be less than theirs or more, okay? Just keep it in documentation. It's easier if it's in that policy because then you can kind of go back to it. And once you set up your depreciation for an asset, it's really easy to carry it forward, okay? And hopefully a lot of you have these up. All right, so quickly, we're going to talk about depreciation. So what really depreciation is it really kind of like allocates the cost over the time span you have the asset, okay? So that's why if you bought a new truck for $50,000 and it was only going to last, 5 years, then you're really allocating $10,000 a year for that vehicle, okay? Oh, hey, that was the example in here. I'm impressed with myself. Okay, so you will calculate what the yearly depreciation rate is. That's what I have here at the bottom, okay? So again, you bought the truck, it's $50,000. It's last 5 years, you're gonna divide the $50,000 by 5, and it's gonna be $10,000 a year. All right, so that's depreciation. But you also have to keep track of your accumulated depreciation. Okay, and so that is the amount of depreciation you have taken since you bought the asset. Okay, so in that example, all right, in the first year, if we had bought that truck in 2025, my accumulated depreciation at the end of the year is just $10,000, right? But the next year, it's going to be $20,000. The year after that, it's going to be $30,000 until I fully depreciate the asset at the end of the 5 years. So in 2029, my accumulated depreciation would equal what my historical cost is, which is $50,000, and I would know at that time I have used that asset for its useful life. We're probably going to be preparing to buy another one, okay? A lot of times we get things confused with book value, okay? Book value is basically how much of the asset value do you have left, right? So if we bought that truck for $50,000, we've owned it for 2 years, so we have $20,000 in accumulated depreciation. We are going to take the historical cost of the $50,000, subtract the accumulated depreciation, and our book value is $30,000 because that's how much we have left of useful life. Okay, so sometimes you're going to ask questions. You'll see as that goes through, and when you're inside the gateway and you're putting it in there, you'll kind of understand it a little bit. All right, to see what those numbers mean. All right. Do you have any questions on depreciation, accumulated depreciation, book value, historical cost? Clear as mud. Okay. All right, so Stacy talked about the physical inventories, and I want to stress it again. And I was talking to the ladies back in the back during her capital asset thing. It is, again, important that if you want to put a little bit of responsibility on the departments, that you have a policy for them to do their inventory, for them to maintain how much assets they have, okay? If we come in during an audit and you have no policy that puts any responsibility on them, and the capital assets are wrong, let's say for the sheriff's department, who does that arc go against? You, right? Because Chapter 1 says, it's your responsibility to report it, right? You know, you have to be the one that makes sure that it's all taken care of. If you have a policy in place and we come in and you say, Sheriff never told me they bought that truck from commissary. I had no way to know. And you have a policy that says that they are supposed to give that information to you to record, then we can put that on them, right? Because they're supposed to be following your policies. Does that make sense? Okay. Just because it's my favorite topic in the whole world. Assets are especially important when it comes to federal grants. Okay, there are separate federal requirements for these. So when you're keeping your capital asset ledger, if you purchased it with federal funds, you must mark it on your capital asset that it was purchased with federal funds. Right? We look at all of that when we're testing the federal grants. So make sure that you have it marked. You've got to specify that. Okay. All right, 2 minutes, and I think I can do this. All right, a couple, Thank you. Thank you. All right, so just a couple miscellaneous reminders. I just started chewing ice. That's bad. I might not make it 2 minutes. All right. All the AFR areas must be completed. Okay. So if you're in there and you're like, we don't have any AR, AP, or I don't want to do that section, and you just move past it, you will probably have a finding, right? Because you're required to complete every single section. Now, if you say you have zeros and you go in and you put the zeros in and we come in and you can prove that I had no ARAP, then you're good, right? But you can't skip something or not do it, all right? So again, and they are looking for every single area that's completed. Whoops, I did not on the slide. All right. The other thing I want to talk is that we need to make sure that we report all funds and transactions within the county. So when we talk about supplemental AFRs, here's a list of those offices, okay, that could have one. I forgot treasurers after settlement collections. See, I forgot that part. All right. I want to emphasize here that, again, I think I said it yesterday, but there should be no banks over here to the side that aren't included in my funds ledger, and somebody's writing checks out of it, but it's not going through the claims process, and we're not reporting it, but it's this big bunch of money over here. Okay? Anything that comes into the county is public funds. There is no authority to move that money to a bank account off to the side that gets to write checks out of it without going through the commissioners. Right? We just move it over there. We don't account for it. We don't record it. It's off the ledger. It just doesn't exist. Okay? don't have that. That needs to be reported, and it needs to be on the funds ledger, okay? All right, and real quickly, when you're doing your AFR at the very, very end, before you can submit it, go look at the submission errors, okay? We can't catch everything, but these are like the main things that like we could see if you tried to turn it in, we know that's going to be wrong, okay? That's incorrect. It's not going to work. That will list out in the submission errors. There are also a thing right underneath of it that's called submission warnings, okay? Those are things that might say, hey, you might want to check this out, okay? This might be a problem. The difference between the two is you can't have any errors to submit. If you have errors, it will not let you submit your AFR. If you have warnings, it will, okay? So, a warning is just saying, hey, there might be an issue here. An error saying, this is not going to work. All right, so just make sure you know the difference. You can download that in an Excel file if it's easier for you to see versus those little menus that pop up. So again, it's what works for you. All right, at the end of, or not the end, so in February, Stacy and I will start monitoring the AFRs, okay? We look to see who is submitting. We have a log, okay, and it's not a competition, but it is a competition in our office between the other directors. And you can say it's not fair because we only have 92, but Stacy and I are like, no, we think it's fair, right? I mean, sorry that you have 1,000 townships, right? But like our 92 counties like do what they need to do. So we win almost every year. So thank you for that. But we do start monitoring it. We look at them. As we get closer, and we normally only have a few outliers that are like right there, we'll actually go in. We can see everything that you're entering when you're entering it, okay? We'll start looking around to see, are they having an issue with something? We'll kind of dig down into it. If you're a county who, let's say, is missing big things, you've got 5 days till submission, you're probably going to get a call from us because we want you to submit timely. If you don't submit timely, it's a comment in your report, right? We want you to, so we will help you. If you get stuck in a section, call us. Let us open it up. Let us look at it. Let us talk you through and give you some guidance on how to do that, okay? But I want to stress that that's what we're going to do just to make sure that we get those AFRs in. If not, we have to do this whole subpoena process. And Stacy and I pride ourselves on never having to go past the first step, ever, right? Most of the time, when it gets to that point, I can call whoever it is, and it's turned in by the end of the day. Okay, you guys are that good. So I'll give you that. The only other thing is what happens when you submit it and you realize, crap, I left off the after settlement collections, let's say. Can you fix it? Yes. Okay? Just because you submitted it does not mean you can't go back in and add stuff later. Okay, so if you're going to do that, you will go into your AFR like you normally do. You'll scroll down to the very, very bottom. That's where the submit button is. And at this point, it should say unsubmit annual report. Okay, you can click on that unsubmit button. Okay, and it's going to come up and basically, are you sure you want to unsubmit? Okay, and you're going to click it, you're going to click yes, and then it's going to allow you to edit your AFR at that time, okay? One thing, if you do that, which is perfectly fine to do that, couple things. As soon as you're done, you need to resubmit immediately, okay? You can't leave it unsubmitted, all right? So you're going to submit it immediately. If you notice an error, let's say 3 months later, okay? Then whether you unsubmit it comes down to when you're scheduled for an audit, okay? You cannot unsubmit during an audit, okay? Your financial statements are already out. You've already agreed to what they are. There is no fixing at that point if you're under audit, okay? So if you have been contacted by the field and you've realized you've made an error at that point, you need to be talking to your field examiners, especially before you sign the Form 13, okay? And say, hey, I realized I made an error. I would like to make that adjustment. How do I go about doing that? They will help you get it into the financial statements before you sign the Form 13, okay? Then your change will be incorporated. Okay, so if it's right after you do the AFR, there's no issues. Go ahead, unsubmit, fix your thing, resubmit. But if it's been a minute and you think you're getting ready to do audit, you need to like navigate that. If you don't know how to do that or know if you're going to, or you have a question, Stacy and we can look at the audit plan and see what that is and say, hey, you're not scheduled for another month or something. Go ahead and make the change, right? Or, ooh, they should be contacting you in a minute. Wait, okay? All right. Ooh. Is there any questions? Okay. Fun stuff. Stacy, you want to come talk about resources? Oh, while she's coming up here, we are going to have a smidge change in the agenda, just a smidge. The resources that she is going to give, we are going to do another presentation at 2:30. So she's just going to do a shorter presentation, and then I'll come back up and do one on food and beverage. Okay? Just still end at the same time.